Welcome back, everybody, to the Dividend Diplomats YouTube channel. Lanny, Bert, who are we? We're the Dividend Diplomats. Guess what, everybody? Today, we are talking to you not about a dividend aristocrat. We are talking to you about a dividend king that just announced a big dividend increase this week.
Guys, before we dive into this Dividend King, make sure to smash that subscribe button. Give good old Bert and Lanny a nice thumbs up. We're staying invested in the most volatile market that we have seen, so far in the last 12 months. Is it time to buy another Dividend King that just increased their dividend?
That's right. You hit it right on the head. We are recording this video on April 12th, the evening of that. It's a pretty big day in the stock market. The March inflation numbers were released, and let me tell you something, Lanny, inflation is not cooling off. If you were hoping for some lower inflation numbers, you were disappointed with those March numbers. It continues to soar.
What was that, 8.5%?
Yeah, it's absolutely wild. It doesn't look like it's turning around anytime soon. The Fed is continuing to do what it can to battle inflation. Interest rates are rising, trying to take some of that money supply out of the economy. But with that potential slowdown in the housing market, housing prices falling. Interesting. A lot of stuff going on right now.
A lot of stuff going on. Luckily, what that does is it leads to volatility in the stock market. So if you're a buyer and a holder for the long term, this is a great time to be investing in the stock market. What do you think about that, Bert?
I think that is the worst statement you have ever said on this YouTube channel, Lanny. I'm kidding. I love it. Let's go. Let's go. But in all seriousness, I couldn't agree more. There are plenty of great undervalued dividend growth stocks to potentially buy out there. And what's interesting about this company that we are going to evaluate today, obviously, they just announced some big dividend news, a big dividend increase. Actually, today, several hours ago, they made this announcement, something that we have been anticipating. And you could potentially say that their products are recession proof as well, because they are in a sector that in good times and bad, you need to continue buying their products.
They just increased their dividend. They're a dividend king. Market is volatile. Bert, I think it's time to run Procter and Gamble through the Dividend Diplomat Stock Screener and to take a look at the dividend increase that they just announced at the end of day on April 12th.
That is right, brother. So how do we look here at the Dividend Diplomats Dividend Stock Screener? Jack, 3 metrics and one bonus metric. Price to earnings ratio, less than the S&P 500. Payout ratio, less than 60%. History of increasing that dividend. We're going to look at that 5-year average dividend growth rate and how long the company has increased that dividend. And you listen up over here, brother. That bonus metric is the dividend yield.
You got that right.
Not my best Hogan impersonation, but I'll take it for tonight.
Well, now let me tell you something, brother. No, I can't even get into it right now. I'm still congested for like the third week straight, but that's besides the point. We're going to look at Procter and Gamble. They just increased their dividend, and we'll cover that in that third dividend stock metric, the dividend growth rate. But again, Procter and Gamble, great consumer goods. The brand portfolio of Procter and Gamble stock, it runs deep. I mean, Bert, you've got what? Tide, Dawn, Pampers. What are some other brands that you can just rattle off?
Bounty, Charmin, Head and Shoulders, Old Spice. Let me see here.
Gillette.
Yeah. Oh yeah. Olay. It looks like NyQuil. Is that what I'm seeing? NyQuil. Yeah, NyQuil. Oh, so I mean, yeah, that's what I meant when I was saying earlier that a lot of their brands are recession proof. So what am I meaning when I'm saying that here? Inflation, prices are rising. So people, when they're going to have to look at their budgets, they might have to make some choices about spending in certain areas where they necessarily can't anymore enjoy some of the luxuries that going out the extra meals. But for your day-to-day life, you're going to need paper towels. You're going to need laundry detergent. You're going to need shampoo. You're going to need cleaning products for your house. You're going to need the products that Procter and Gamble offers, even if those prices are increasing.
Exactly. And chances are Procter is probably passing on those price increases to the consumer. Stinks as a consumer. But guys, it's only going to at least maintain more than likely Procter and Gamble's profit margin on the products. Obviously, we'll see that in the upcoming quarterly earnings releases that they'll have, but they're going to protect theirs before they protect yours.
Yeah, you're not kidding. And earnings are, I believe, are going to be released towards the end of April here. So you're exactly right, Lanny. Keep an eye on Procter ahead of earnings to see if it is the time to buy Procter before any news comes out about what inflation is doing to the company.
Exactly. And as we were saying, this is April 12th right now. And again, Procter Gamble stock currently is trading at under 160 a share at $159. They're down at about, I don't know, $6-7 from their 52-week high. They're actually having an okay year to date because they're not down as much as what the market is. They're down about 2.5%. In the last week, they're up about, or in the last 52 weeks, dating back to April of last year, they're up about 18%, right, Bert?
Yeah, no, you're right. So I think it just sounds like the stock price is doing kind of what we're articulating so far throughout this video. When the times are bad, not falling quite as much in line with the market, and it kind of works in the other direction too. It might not increase as much when the market was skyrocketing over the last few years.
Exactly, guys. So, Bert, let's dive into that first metric. Kick things off with that price to earnings ratio.
All right, that price is $159.01 as of close on April 12th. Forward earnings per share using the 2023 estimated EPS is $6.33. Gives you a PE ratio of 25.12. It's kind of in that Pepsi range that we talked about in that last Pepsi video, right, Chico?
Hey, Chico, yo, yo, is Lenny Ramon? You trying to tell me what's an undervalued or overvalued dividend stock, Chico? So, guys, the S&P 500 price to earnings ratio is actually 25.08. So they're pretty much neck and neck with Procter and Gamble's price to earnings ratio, and just a smidge below Pepsi's price to earnings ratio. So, guys, are they just appropriately valued right now? So, Bert, that second dividend metric, this is actually very interesting as we dive into the dividend payout ratio for the second metric.
Yep.
First, yeah, go ahead, Bert.
I was just going to say, we'll talk about the increase in the next metric. I'll just say their new forward dividend is going to be $3.65. Divide that by the $6.33 EPS estimate from above. That gives you a payout ratio that is oh so perfect of 57%. Boom.
Exactly. So that's what was very surprising actually about Procter and Gamble, because I want to say it was like the years from 2015 to 2019, maybe even 2020, their payout ratio was actually approaching, like Pepsi's video that we came out with, approaching the 70%. So it's actually interesting that Procter & Gamble is below 60% still after the dividend increase.
Yeah, and what's interesting, and correct me if I'm wrong on this, is if I believe management over the last few years has taken some cost saving initiatives. They've tried to slim down the operations, trim the fat per se, and maybe that's the result that you're seeing from it, where the dividend grows at some rate and that they're cutting expenses at a much larger clip than growing that dividend.
They probably just trimmed a little bit of deodorant off the stick to, make sure they don't give you as much as what they used to, or take one scoop of Tide out of that big box of.
It's 128 fluid ounces, but if it's actually 127.8, is anybody actually going to figure that out?
Yeah. Do they actually ask what the fluid ounces is made of? Yeah. Water is a lot cheaper than.
Finkel is Einhorn, and Einhorn is Finkel. Procter is Gamble, and Gamble is Procter.
Hey guys, that was the dividend payout ratio. Now, Bert, we introed this that they just increased their dividend. Let's go into that third dividend stock metric, dividend growth. Oh,
you didn't see the guitar getting held up there. There we go. Yeah. There it is. Yeah, that they announced a nice, calm 5% dividend increase right there. Increasing, I always hate their quarterly dividend, and the decimal that goes out to increasing from 86.98 cents to 91.88 33 cents in that quarterly dividend.
You
Drives me.
know, I'm going to take it a step further here because I just need another confirmation from their earnings release or dividend increase page. And yeah, it is 91.33, not like 91.325, and they just round to three.
Yeah.
It's
Yeah, they're like,
91.33
yeah, like we're
cents.
gonna
You
cut
want
this
that
off of,
30.
yeah. Gotta make it difficult. Gotta make it difficult. So obviously a 5% dividend increase. But Lanny, why don't you tell us? Okay, so they've increased that 5%. Tell us, how does that compare to their 5-year average dividend growth rate? Is it in line? Is it above? Is it below? Let us know. Let them know.
Let them know. Cavs lost to the Brooklyn Nets. You lost the first quarter. You lost the game. You better win on Friday, please, Cavs.
Let them
But
know.
yeah, I'll let you guys know. The 5-year dividend growth rate on average now is 5.40%. So this increase of right at 5% is in line with the 5-year average. Obviously they had a very big boost last year. Bert, you can correct me if I'm wrong, but I believe it was a 10% increase in 2021, right?
That's right. They crushed it last year. They came out swinging. So it looks like they're pulling back
And
a little bit here.
Minnesota on the head crush.
Yeah, and then when the soda got on your clothes, they cleaned it with some Tide pens to bring it home. But all right, so
Full circle.
we said they're a dividend king. A dividend king as a company has increased its dividend for 50 plus consecutive years. In that dividend earnings release, they announced that this was their 66th consecutive annual dividend increase. So
Wow. Wow. How many years, Bert?
66 consecutive years of increase in that dividend. But that is, I mean, they've been paying a dividend since 1891. So what is that? 131 years of paying a dividend?
Yeah. I mean, it's a couple of years, couple of days.
Few years long.
I was about to say 66. Looks like the dividend is about to collect Social Security over here.
Hey, oh. So obviously they have that long-term history of increasing that dividend. It's pretty consistent growth. Right, their increase this year was in line with their average, although it was a little below last year. Let's move into that bonus metric. So now that they've increased that dividend, now they've juiced it up that 5%, where is their dividend yield? It is actually now 2.30%, so about a percent higher than the S&P 500.
A percent higher. You're buying a dividend king. Pepsi was about 1.1% higher. Johnson and Johnson's probably in the same ballpark too from a yield standpoint. So obviously Johnson and Johnson, the other dividend king that Bert and his wife buy every Monday, their PE ratio is in that 18-ish range. Obviously healthcare.
And from our past videos over the last month, Unilever, a competitor to Procter & Gamble, is right around where Johnson & Johnson is in that mid to high teens PE ratio too. They're not a dividend king though.
Well, I'll say that we've got a lot of good stocks that we have been featuring on the video. So Bert, what are your thoughts about Procter & Gamble right now at this current stock price of 159?
So when we go through the metrics here, this is what I'm thinking. PE ratio, not the cheapest, in line with the market. It's 25x. Gotta love that perfect dividend payout ratio, 57%. Love the history of increasing the dividends. We've covered that throughout this video. We don't need to cover that anymore. And that yield is 2.30%. It's a premium to the market. So I love the company. I love the company is what we've talked about in the past. We put the article, we put the video out there. I think Procter & Gamble is a fantastic foundation stock for your portfolio. That's why it's one of our top 5 foundation stocks. Similar to what we said about Pepsi, it's not the cheapest, but if you are a beginning investor looking to build that dividend portfolio, Procter & Gamble is a fantastic company. I couldn't be happier that my wife and I have positions in Procter & Gamble, and it's a part and produces dividend income for us.
Procter & Gamble.
But I'm not running to buy it today. That's the thing either.
Yeah, top 5 foundation stock. Can't go wrong buying it. It's hard to predict of where the price is going to go. Legacy company. I agree. Not running to buy Procter at any point right now. But if you're a new investor, beginner investor looking to buy individual dividend stocks, J&J is a great one. Pepsi is a great one. Procter and Gamble is a great one. I can't even say anything more, Bert.
No, there's nothing more to say.
Let them
So,
know.
yeah, let them know. So let us know in the comment section. We've done the talking about PG. You do the talking about Procter & Gamble. Let us know in that comment section what you think about the company at its current price or as its status in our mind as a foundation stock for your portfolio. If you haven't already, subscribe to our channel. Give this video a thumbs up. Maybe if we get to 5,000 likes here, Lanny and I will buy a share of Procter & Gamble, even though it's not undervalued for our metrics.
How many likes are we looking for?
5,000 likes.
I will if that happens, guys. Again, tell us what dividend stocks you've been buying right now as you finish off the month of April. We're about, midway through the month. Hopefully you're filing your taxes here within the next handful of days. We appreciate the stop by and the support as always. That was Bert, and this is Lanny from the Dividend Diplomats. Over and out.